Hey, welcome to Forward Focus. It is May 3rd. I am going to have to send out the registration link for all of you folks again to make sure you are on the upcoming Forward Focus. You can also go to tonyhansen.com/Friday to review our session here today. Like I said just a second ago, we do have the Dow trying to form a little bit of a 2T. Posted a chart there in League of Traders forum. Let me show that to you here quick. All right, here. So we're just dealing with this upper level resistance right here, a little bit further than a measured move and a little bit stronger momentum. So this can be a little bit of a difficulty to try to get this going. The Dow looks like it might try to go for a 2T2, but it is still shy of previous highs here this morning. So this is what we're looking at right now. The shifted momentum move here, right up into some resistance here. So we're just looking at this change in momentum. The Nasdaq's been testing the third test of the upper end of a channel, and our Russell is right around a 76.5% extension intraday. So it still has some wiggle room on the upside too. Let me show you what we got over there. So here's our Russell. And this is the extension we're looking at right now. Let me put this on here. So here's where we are currently with the Russell. You can see we've still got some wiggle room. So as the Dow tries to do a 2T, this could negatively impact that attempt because there is a little bit more wiggle. Now the Nasdaq also, let me show you what's going on with the Nasdaq. It's trying to go and push up for potential 2T on there as well. But this is that wipeout zone for those of you that attended the wipeout class, where we have things basically trying to push. Let me go back over here to the tick charts. Trying to push at these highs where it's the tilted channel after a main impulse move to the upside. So you've got your main impulse move to the upside. Overnight last night, this was the shallow Phoenix I posted for you guys in the League of Traders room. So you recall, coming off of this low, I was focused solely on the upside coming off of yesterday's lows. So we have just come into congestion here in the morning at previous highs, and you can see this tilted move, tilted channel to the upside. We've got 3 swings, 2 highs. Each of the congestions or corrections is kind of slow. We had a little bit of a time correction first and then price correction. The opposite is actually better when you're looking at strong continuation moves, where if you get a price correction first and then a time correction, you have really high probability odds of a strong move on the upside. So we have a little bit of that opposite move, which makes us a little bit more iffy when it retests that high for the 3rd time. So as you can see here this morning, it hit, it's held, but we're not really getting much of a reversal off of it. If we had time corrections in both cases, we would usually get more of a pullback. So if we had like 3 highs like that, you usually get more of a pullback, larger correction coming off of that high. So a little bit of the most iffy zone. So this one usually goes higher. This one more often will turn lower. This one can kind of do either or. So that's where we're stuck at right now in the overall market, it's kind of that either or zone. Hence, we've been calling it a wipeout zone because people can get trapped one direction and then see it end up turning the other direction. On the 20,000 tick here, you'll notice that on the NQ, we are right up at the upper end of this trading channel again. So we had that flush to the downside going into the week. As you'll recall, we've been looking primarily for the markets to try to push and continue higher, but we've just been stuck in a little bit of a corrective mode over the course of this past week. I want to show you that daily chart so you guys can see where we're at on the daily. So the daily is just this smaller little correction here on the larger daily time frame, but on the weekly charts, we're still within this wide wedge. So over the last while here, we've been looking for this to kind of push to higher highs. We're basically at kind of that wipeout type of zone here on the daily charts, where it had this slower shift in momentum after the stronger surge. And we're trying to get that push breaking through that upper end of the channel. It's really just been trying here over the last couple of weeks where it just keeps pushing and pushing and testing that upper end of the channel. So it's looking like we're finally starting to get a break of that. We've got earnings season underway right now, right smack in the middle of earnings season. We've got about 250, 300 plus earnings coming out per day here in the middle of the week this week. And that's leading to a good deal of whippiness overnight. But overall, after a bit of a rough start with earnings, we're seeing things basically continuing to try to push higher. So right here, even though we're showing some intraday exhaustion, intraday extension here, as far as the size of this impulse move on the intraday charts, I think we still got potential for this to keep pushing on the upside. Something like even a bit of a correction here can push farther. Basically, just even this could even just break through these previous highs here with the widening wedge here on the smaller time frame. That could even still push to a higher high. So prior highs on the daily time frame here, not necessarily as strong as you often see them. Like we saw move back into them over here where they held really strongly. But when you get the widening wedge, those previous highs tend to have a little bit more push through them. So it wouldn't be surprising if we see that try to push through there as we go into next week even. So overall, I'm still focused more on the bullish side with just kind of the shorter term corrections. You can see momentum picking up really on the 15-minute chart here. So this can easily still push to higher highs. Things like 2Ts, momentum reversals, that kind of stuff can keep that push going. What you don't usually see here are really rapid corrections. So with a sharp move like this, the strongest type of correction you'll see is usually like we saw here, where after you get the strong drop, you get a shift and it continues the trend. But because we've seen that happening coming off of the lows, more than likely we won't see a repeat of it turning back around like that. Show you some of the larger charts. Here's the daily on the Russell. So what you'll notice on the daily on the Russell is we came right back 61.8%, retracement zone, congested between there, right around the 50% zone. Went with the inverse head and shoulders, and we're just trying to push and try to get broken out of this right shoulder a little bit more here. It's a really messy zone. You can see we're not having good luck with nice clean break on it, but that bias is still there for this to try to continue to push higher as well. Had a little bit, going into the beginning of the week, we had a little bit of a kind of 2T with the upper end of the channel. You can see that on the daily 240 minute here actually. So we were on corrective mode going into the week. Just with that channel there is right smack at 100% measured move at that upper level. So this has kind of tried to shift things and correct things, give this more of a second wave of correction here off of the highs. And we're trying to see that break. It's just a tilted breakout And this is where you can see it's easier for this to try to push into new highs with this tilted channel here. So that can still keep going as we're looking for continuation on this daily chart here. Yeah, a lot of stocks are sideways and slow right now. Part of this with this earnings season right here that we've got this happening is that and just like we've talked about over the last couple of weeks, a lot of this is where many stocks are exhausted on weekly and especially on monthly timeframes, but they hit the exhaustion levels with such momentum that it's really hard for them to just totally give up and turn around. We're seeing some things like Google, for example, that are pulling back pretty harsh on earnings. I'm actually going to pull up TradeStation here so we can see some of the stocks a little bit better. So we are getting some stuff that is reacting really harshly, but because they hit highs with such strong momentum, it's hard for them to sustain a downside correction. So they're getting a lot of these flushes off of the highs. They're pulling back kind of quickly, but then they're recovering. Let me I'll have that pull up here in a second, and then we'll look at some of those individual stocks as well. But it's just normal because of where we are at on the weekly timeframes. With the weekly and the monthly levels up here, they're hitting resistance with pretty decent momentum. So when things correct here, it's easy to get a lot more of the back and forth type of action. Even when it tries to hold that zone, you'll probably see things start to round off. What's interesting is that because we do have a widening wedge here, we might get things trying to do a sharper drop as we head into more of the fall, but not quite as easily quite yet. But as we go into fall, we might start to see some sharper corrections again, just because of this being the fourth pivot. So you've got 0, 1, 2, 3, and you're going into 4 here on the megaphone. So we'll watch that as it comes up into this zone here, but I think we've got room for this to try to push up into that. And so a lot of the individual stocks that are falling, they're still having that overall kind of magnetic action going on in the overall market, kind of like what we're seeing on the Russell right now. You know, it stalled at that 76.4% on the 15-minute time frame, and yet it still had that 100% extension as a bit of a draw. So when we look at that on a 15-minute chart now, you can see it started to slow right in there, but it's still pushing up into those higher highs. So that's kind of what we've got going on right now in a lot of securities in the overall market as well. So Google, weekly time frame on Google. Here you can see an example of where we are seeing things coming into major resistance levels. Apple, same thing. It's coming into major resistance level. Yes, they had 2 waves up, but they're still pushing up into that resistance a little bit more for these better tests. Let's see, Amazon, same thing. It's pushing up to go and retest that. And there's still a little bit of movement left in here. So when we look at Amazon on the weekly time frame, we've got the Phoenix, and then we've got 1, 2, but it hasn't completed a measured move for a 1, 2, 3. So this is an initial level of resistance, but it still has that potential to push up to here to complete this correction coming off of the low. So this is a pattern we've seen in League of Traders a lot, where you get the Phoenix and then you get a 1, 2, 3, and then you get a widening up. And so it is at the resistance where we look for with the channel break, but it hasn't completed a measured move on that weekly chart. So it still has that kind of extra wiggle room to try to do that. And then Apple has, where it's basically trying to complete a third move there too as well. And so that channel break zone is actually going to be more of a measure move level on Apple when that comes back up into that zone as well. So the momentum here still has a lot of room to play around to go up into that. And while there's individual stocks that are giving us a lot of exhaustion, this overall action that is happening on these major movers, major tech stocks, is going to impact that and kind of try to hold it up a little bit longer. But you can see that as we go into fall, that zone is going to get that better test back and forth. So it's going to be easier to get corrections as we go into the second half of the year. Facebook, same thing. We've got one. We've got some small measurement right in here, but there's still room for that to wiggle, still room for that to pull up a little bit more. So daily on here, it doesn't look like greatest setup at the moment. You've got a little measured move on the daily charts with the gap. But if we look at the bigger charts, there's still room to play. Netflix, same thing. It's because of the V bottom, where it has that strong V bottom. It makes, and once it goes past that 50% basically, it makes it more of a draw to pull back up into the zone of the previous highs. So most of the time it's going to go and try to retest that zone of the previous high. So if this is our high like that, and you get this V pivot and it comes back off of the low with the same momentum as it comes off of the high, what you're looking for is this channel on the upside. This becomes the lower end of the retest zone, and then you'll get kind of a slightly higher high as an upper end. So it can come up to the lower end here, and if it does it with kind of like a steady initial main swing, it can go and do a 2T and kind of come up and have like that slightly higher high where it rounds off the highs. If it does it with a slower move like that, then that channel there, where that channel breakdown happens, that's going to be a stronger resistance zone. So it has less of a chance of going to a higher high. And it kind of depends on how fast is that initial reaction off the support. Does it do like a 1, 2, 3, a really fast move back up into that channel breakdown zone? If so, it's easier to go to a higher high, even though on the bigger time frames, it's rounding off. So this might be a really strong move on the bigger time frame. And even that higher high can happen with what can seem like big momentum, but it's still reacting to this main resistance level. So you get this massive move to the upside, you get this strong correction, which is what many of these, well, the FANG stocks are doing. And then depends on how it reacts off this support is what happens next. So if you even had like a slower reaction like that, then that 50% level is really strong and it can come back down and retest the lows. So when we were first getting reactions months ago off of last year's lows, off the Christmas Eve lows, if that had that slower pullback here and had a little bit more of a time correction as well as a price correction, then that could have easily brought it back and retested the lows faster. But because we had the stronger reaction, that makes this level the next level of resistance. But if it has a slower reaction there, after a strong move into it, it can go to a 2T. If it had a slower reaction, it could go retest the highs and pull back lower. So these are the different variations of reactions you can get after this V pivot. So that's why it's so important to watch how we react off of the support levels. And so far, the support levels and all these FANG stocks, these major tech stocks, have been really strong. And so what that has meant is that this opens us up now to the possibility that we can see things like 2Ts potentially happening on these weekly time frames. And that's going to impact what happens in the overall indices. So when we've been looking at the NASDAQ in particular, to have that widening range happening and trying to push into those previous highs and go even higher at the upper end of that widening megaphone that's happening on the weekly time frame. Everything that we're seeing in these FANG stocks, which is Facebook, Amazon, Netflix, Google, all of these have that move and that potential to push to those higher high levels. So this is really impacting a lot of these attempts to correct, where we're seeing just kind of like the short-term reactions, but they're not pushing up into longer, stronger levels. By the way, that Russell here is starting to come into the 100% extension, and it's a slightly higher high and a measured move on the NASDAQ on the 1,000 tick chart. For those of you that are still day trading here as we are talking, let me show you that quick. So NASDAQ intraday here. Got to squish on over here. Got 2,000 tick time frames right here. Actually, you can probably see it on the 500 a little bit better. I've got some duplicate charts here. I'll show you on the 200. Got the measured move zone right here. Slightly higher high. So for this to have been like a clear 2T, it would have been like that. But we've got that same level of resistance as we would have if it formed like a more typical 2T pattern. So here's what a more typical 2T pattern would look like. Again, this is wipeout zone on the larger time frames because we have that strong initial start. We've got the one wave move. Didn't quite go for the 1, 2, 3 fast. 1, 2, 3 would have gone like that. Instead, it shifted. So this becomes a trickier zone for trading. And we've got that 2T trying to form here. Just lead to a little bit of a correction, but it might not fully turn it around into the afternoon just because of this zone that we're in. It's a much more difficult zone for trading. You get more of the scalp type of setups. Dow here is also holding at this level. Let's go look at our Forex pairs. We kind of touched upon our major stocks and our indices, but let's go look at Forex here. I'm going to start with the euro dollar. And so what we've been looking at on the euro dollar is I've been focused more on short setups overall over the last couple of months as far as like the larger bias, because what we've been seeing on this monthly time frame here is that as this came into the support, this became a do or die zone. And it just couldn't react off of there. If we'd gotten more of a reaction off of there, we could have gone for, again, retest of this zone of highs, or even pushed up to a slightly higher high like that. This pattern here that I just drew is really common at a level like this, but it just couldn't get off the ground there. And instead, it shifted here. So what this leads to now is the potential that this can go for a second wave on the downside. We haven't fully seen any confirmation on this yet. We're just seeing this constantly retesting that low of the channel. So what that's meant is that on daily timeframes and intraday timeframes, it's really just been a zone focusing on waves of 2 and 2 back and forth. On our daily chart here, you can see really clearly as we were going into the end of last week, we were just coming down into the lower end of that channel. Didn't quite hit a measured move on that continuation on the daily chart, but we got a little bit of a reaction off of that low. So what we need to get the confirmation for a breakdown though is hugging this lower end better. So the reaction off of that has actually been working against a confirmation. We usually want to see a slower reaction and then a breakdown. So where the reaction off of the support would have been more muted, kind of gone a little bit more sideways, and then tried to break down. That would have offered a really, really nice short setup on the daily charts. We're just not quite getting that yet. Look at the 240 minute, and you'll notice that the reaction off of the lows, this looks a whole lot like what we saw happening overnight and yesterday afternoon in the indices, doesn't it? We had the move up, we had that shallow kind of phoenix look, and then this was the action here this morning, basically starting, well, when the market closed yesterday. I'll put that comparison up here so you guys can see it. Since I'm talking about it, it's almost a spitting mirror image of that same type of action. So you can see where we're in the zone that this has that 2T potential to crash, because that's what happened on the euro dollar on the 240 minute time frame. Here's one wave, two waves, one wave, two waves, gaining momentum on that second, gaining momentum on the second, sloppier start, shallow phoenix. That's the trigger we had overnight. Trigger overnight. This one had the typical 1, 2, 3. This one didn't quite go for it, but it's shifting that momentum in here. So in the euro dollar, that led to another sharp pullback. And that's why this is that harder zone to trade, because this could fall and correct pretty strongly off of this level. We're seeing the Dow is holding the 2T here, and actually the NASDAQ is also starting to get that pullback off that 2T. But so basically this whole pattern is what we're looking at here. We've got that nice comparison. So euro dollar, as far as like trading the moves, we've got a two-wave correction here. It's trying to bounce again. Well, what we need to see on the bearish side is basically this bounce flail and not have much follow through on the larger scale, just kind of shifting momentum. That would help turn that and give it a nice setup. Something like a 2T again, like here, pulls up into previous highs, goes slightly higher high, that could do it. But right now, as we go into next week, this next week, I would consider it to be higher risk overall, because it's going to most likely be more choppy action. If this does gain momentum and gain steam, that will change things around again. So as we're still seeing this reaction off of that second low here. If this goes and does manage to pop back up really fast, back up into the upper end of that channel, that's going to change things on that weekly time frame. So you can play the moves on the intraday charts, just watch that momentum. So if you're long, for example, coming off support, and you're seeing it struggling with those previous highs, then it might not really get going. You'll want to use some closer trade management. So if it breaks channels after a two-wave swing, that could actually reverse a position. But if it manages to go faster and pull up faster, then that's going to change my outlook on that larger time frame again. So we're really at a zone where it's play the small moves and see how the momentum develops on those small moves to see if it can turn into bigger move. And it is a do or die zone still. We haven't gotten the confirmation on a breakdown, and we haven't seen a major setup yet on the confirmation on a breakdown. Thought we might be getting it starting here, where it had, see, here's the two wave, and it had that slower start. So we had this shift here. So this could have gone and picked up at that point. But again, we would have wanted more of the sideways congestion here to really get that confirmation for it. If we look at the time development on this, you'll see it was a little bit early for breakdown. Those of you that are in League of Traders know what I'm talking about. What we want to see is that this move here, for kind of the sideways move, compared to the downside move, the sideways move, you want it to be at least the same amount of time before it breaks. So it's pretty close, but not quite. But it could go up to double that before you get the confirmation on breakdown. So that could even give that pull back up into here before it confirms. So we'll see how this reacts here. The downside move won't be nullified, negated, whatever, until it goes that double length. So it can still go all the way over to here and basically into, well, late summer and still break down. It's just that it can have that pull all the way back up into there before it breaks. Let me show you guys what that looks like a little bit cleaner here by moving my chart over. So what we're looking at is this move to the downside went into the zone of congestion. So it tried to break with the continuation in here and kind of looking at this like midway zone with the 2 waves down, then went into the congestion. So it's kind of an iffy zone if it could go or if it needed a little bit more time. But that's the first level that it could have gone and completely went. Now, this could also go out twice that long though, meaning here's your downside move. Whether you go from this low or this low, it's debatable, but if it goes about twice that length, it could still go and break down. So you've got double based upon here, it'll take you about there, double based upon there, could take you about there. So anytime it could pop up into here, break these previous highs, and still manage to turn around and break lower. But ideally, it will do it with slower overall momentum again, hold like a more gradual channel like that, and then get going. So first way, originally I was looking was if this could go and do a 1, 2, 3. That's the first way we see that happening. Second way, we'll go double and then still try it. So even if it pulls back up, it can even break this channel, which will basically trap people on the long side, but then it still has that potential to break down. So don't get fooled into thinking that if this pulls up here, breaks this technically downtrend channel, that's necessarily going to be a strong buy signal. This could be a 2-wave move up and actually trigger that larger confirmation for the short on that daily chart. I know this is such a messy chart. It's hard to see this pattern. Those of you that are in League of Traders, you'll have seen it a lot more. But for those of you that are only joining me on Fridays, you don't see it quite as often. We don't go over it quite as often. Basically, a cleaner version, though, will look like this. So you'll get your 2 waves down. Let's say this is 30 days. Base is out another 30 days. It can break there. So this could break down here. You'll usually get like a 1, 2, 3. So this becomes that first zone, and that's basically where you're at right here. The second one is it could even break into a false break, pull back up again, go out twice as long. So now you're looking at around 60 days and then break again. And in the meantime, this can go to higher highs than you saw within that second 30-day period. So hopefully that kind of clears that up a little bit more. So this is where I'm saying this could pull up here, break through that channel, and still break down lower. It's just widening it up and going to that next do or die point. So a little bit of a complicated look at what's going on the euro dollar. Right? Like, why can't it be just like a beautiful, pretty 2-wave continuation? Actually, this setup, though, the way this forms happens a lot. It's just you usually see it really fast on intraday charts. This is basically what we call that wipeout zone. So it's what we're seeing on the NASDAQ on the intraday on the upside. We're just seeing it play out on the downside here on a much larger scale. Dollar yen. Dollar yen this is one that I've been playing the most lately. I've just been liking a lot of the intraday setups on the dollar yen. Right now, we're still looking a little bit more bearish, but it's kind of doing a two-wave correction here. It's kind of getting messy here this last week. On the weekly charts here, it really could do either way at this point. Can treat this like it's going to try to do a two-wave correction and pull back up, kind of flush things up at the highs, and then it can pull back down again. It can even slowly try to gain momentum after like a false start, basically a shallow phoenix that looks like what we saw overnight. So when this hit the really hard low, it went into a shallow phoenix like that here, and that can repeat on the larger time frame and kind of gain that momentum, just like we saw happening overnight on the indices as well. So that could repeat on this larger scale on the weekly time frame. It's a tough zone here over the next couple of weeks. Your risk is going to be higher over the next couple of weeks on trading this, because you're looking at the first wave correction here. Got to see how that tries to play out. If it tries to break higher right here, that could actually pull back into the zone because it'll be too fast of a breakout, really. So, oh nuts. I hate when I do that. I click the button and I didn't want to click the button. I was just talking to Harvey about this yesterday, except in TradeStation and NinjaTrader. So this can have that same pattern that we were talking about on the euro dollar playing out here. So it has the two-wave move back, the pullback, and it was actually did a bigger version over here. We were looking at it as the shallow avalanche over there, but this can play out the same way. Here's your downside move, can go sideways, try to go lower at that point, or it can go out twice as long, go lower at that point. So this can go and hold into congestion here for week or so and try to break down again on the 240-minute charts. Yeah, sorry you guys, that's actually my fault arriving late here. Well, my fault and GoToWebinar's fault. My GoToWebinar erased everybody, so I had to go and remake the webinar for you guys. I'll have to do some updates on that to try to get more people back in here. Gold, let's see. I'm going to actually grab my gold chart on the daily and post it into, hold on a second. Grab this from my trading computer. And copy. Switching things from one screen to the other here. So if we're looking at gold, here we've got the daily chart on gold right now. And what you'll notice is, again, it was that extreme momentum, kind of has the same type of action we saw here overnight in the overall market. Here's basically where that shallow Phoenix version was, and here's where we are at in the NASDAQ right now. So we're just seeing this repetition of this pattern over and over again. Let me again show you the NASDAQ. Eerily familiar, isn't it? So here's your two-wave up, two-wave up. And that's kind of the zone that we're seeing, hey, can this react at this level or not? And give a little bit of a larger flush. And you've seen two examples where that bigger flush can certainly happen. Right now on gold, we had that big flush, and then we had the two-wave measure move correction here. So this is a good level of support here short term. As far as where this is going to go now, On the weekly chart, we are in the middle of a symmetrical triangle, and things are just getting tighter and tighter here. We're kind of nearing the apex. Grab the weekly for you. So here's the weekly. Here's our symmetrical triangle. So the apex is when things come together, right smack in the middle there. So this is kind of narrowing in here. You can see a two-wave move. This could come up and get messier as it plays out in here tighter. So as far as like longer term investments go, this is a really difficult place. It is going to be difficult for a good 4 months or so, probably, maybe even longer, 6 months maybe. Basically, it's going to be a swing trading mode on the daily time frame at this point. So I don't see anything that's like a major setup here at this main level. We've got the 2-8 move. It's a good level of support. We could get some reactions off of it, but it might be a congesting type of reaction where it doesn't really get going as far as momentum goes as it reacts off of this support. You can try it because it could pull up into the upper end, but just realize that there's a greater chance you're going to get more overlap on the weekly bars right now. So you've got to use more of the advanced trade management and just realize, hey, you know what? This might not just do much here at this point. A lot of times symmetrical triangles too, they can try to break one direction and then break stronger the other direction. What do we got on JNUG? People are looking at the gold miners. It's the same type of pattern. You can see there's still weakness in here. So sometimes this can go for like a third low, try to turn at that point. If this was a little bit slower here, it would have done more of the potential for a 2B. So it could have gone like, you know, a little slower like that and bounce. But right now it looks like maybe it'll go for a third move. And if this bases out more right here, it could even do a faster, stronger move down since it had the time price correction first. If it does more of a time correction, that can give you a nice little short to continue that. You want to follow along with the gold futures as well with this on the intraday and daily charts. So daily, we're right at that previous low for support here. That kind of makes this a really strong level to reckon with. But if it goes and base is shorter, that can break to a lower low. If it bounces faster, continues the bounce, kind of shifts momentum, that can give you more of a reaction off of this level. But then just like we saw in gold, it can chop around more at that point. Boeing. So Boeing, because of this extreme drop, this zone here is actually where Google is right now, dealing with the same type of zone. This can go and have that shifted momentum on the continuation on the downside at this point. Right now it's kind of basing a little bit upper level, but it could still easily break to the downside. It's at a do or die point here on the daily charts because you got a 2-wave correction right here, 1, 2. And then you also got this trying to do 1, 2 there. So time-wise, over the next day or so, it's going to try to go either way. I personally would prefer to be on the short side of this with the way this is forming. Let's go look at the weekly. I just like to get that extra little flush to the downside because this is widening wedge here. So you got your first pullback. So this could go, and even if it doesn't go fast, it can still go and do a two-wave move into that support zone a little bit better. Have I heard about the micro E-mini index futures that IB is rolling out? Actually, it's the CME that's rolling them out. What are my thoughts on that? Funny, you should mention that. We just were in the CME's webinar yesterday for this. I'll be doing a class for Ninja Trader on June 6th that will be on strategies for trading the E-mini futures, micro E-mini futures. I'm really looking forward to them. I think it's going to be a great way for people to lower their risk expectations on getting into trading the E-minis. So you're not going to go into just diving into, it's right after the close on June 6th, 4:15 Eastern. I'll send you guys all an email invitation to it too. So we'll talk about not only the micros, just regards to the contracts themselves, but I'll actually show you guys some of my advanced trade management system on trading them and why that is so beneficial. So basically scaling in and out of positions. It's the same thing that I do on the E-minis, but you guys will be able to do it on a smaller scale with micros for those of you that have smaller accounts. So it's even a great way. I used to say for those that could trade the ETFs, if you wanted to get into trading futures, I used to recommend trading the ETFs like the QQQ, Spider Diamonds, and building up to position size into those so that you could then switch over to trading the futures. So it wasn't perfect. And of course, if you had pattern day trader rules, it was difficult. But this way, you can do essentially the same thing in your futures account. So most of the brokers I know are rolling them all out at the same time. I think you're going to get liquidity really building and more confidence in them after a couple of months. I know some people don't even have they haven't like completely decided on all of their pricing on them even yet. They're wanting to see, how the spreads actually are and how we actually see them trading, and they might adjust them afterwards. I know most of the brokers are, at least everybody I know of, is starting them all on the same day. So you've got Ninja Traders rolling out, TradeStation, looks like IB also. There is actually, I'm going to post the replay link for the CME webinar for you guys. You guys can go watch it. I'm going to grab it. Hold on. Now this is just the long link that was posted in my email, so it might be tagged to my email, but it'll still get you over there. Just click on that link, and that should open up the webinar here for you. Posted it in chat. So here, Dave, and log in. So you might have to log in or create an account to access it. But that's the link that will take you to the webinar from the CME group. So you'll have to log in or create an account to watch it if you don't already have an account. Yeah, Richard, just join me on the 6th and we'll dive into that more as well. It should be a really good product for smaller account trader, yes. Here's that link again. I'll post it to all. And this one is June 6, 4:15 Eastern. And I will send you guys all out registration links for that as well. I mean, my focus is to actually show you strategies to trade on them. So that's what the June 6th webinar will do, is I will actually show you the strategies on it. Pound, dollar, whoops. Got a little bit of an inverse head and shoulders forming. Time development is wise is good for this. And again, this was something where over the last couple of months, we've been looking at the same issue as a lot of these Forex pairs. It had to move up, had the drop. Again, this is like our overnight action in the market. And here's about where we are on the intraday charts in the overall market. And so it pulled back about halfway. So it's a do or die zone. It went and did like a 2B here, like at that midway point, and that's trying to do an inverse head and shoulders. But it's still, because of where it's at, it could do an inverse head and shoulders and then still fail and do another breakdown. So it's going to remain a trickier zone here. Really, you want to focus on smaller time frame charts because the overall larger time frames can go either way. Held our measured move into the end of last week. We were watching here, did that shallow phoenix. Again, this is just like the overnight action that we saw in the overall market. Here was like the reaction level we're seeing right now. Tricky zone to trade here because things are going to widen up and get choppier again. Pound Swiss, again, just like that extra little trap. Can break these channels and then still can manage to reverse. So this is actually still holding that resistance we were seeing last week. Didn't quite hit 100% on there. Just looks like a range bound in here, and you couldn't even get another drop over here about a week or so out. Is what I would be looking for the potential for another secondary strong intraday drop. So if we talked about on the US Canadian dollar, it went out too far for another breakdown. So it's almost at a point where this could gain momentum on the upside. Just not seeing setups clearer yet. I'd like to see this kind of pull back one more time and then look for a buy setup on that. This is a little bit of an early break for that with the Phoenix that we were following the other day. Let me show again that on the daily time frame, you can see that Phoenix. So here's the Phoenix. So it has room to go up and kind of do like a 2T, but I'd like to see this pull back one more time so that you get like one more pivot low in here. And that would give you a stronger setup for a buy. That would actually mean ideally this wouldn't continue on this Phoenix as easily, that it would actually pull back and kind of fail and then give you that break in this channel, that you would get that lower low and then go. That would be a stronger setup for a larger breakout on the weekly time frame. If this tries to continue here, then you're risking that 2T that can pull this back a little bit harder. Aussie dollar weekly still looks like it wants to play for another lower low. Two waves. And then we were looking for the possibility of this doing like a 2B type of thing. Didn't really fully materialize into that. So we might get that kind of dropping down here again. I don't see a strong pattern here yet. On the daily, we were watching the momentum shifting. So we went from stronger to slower to slower to slower to the break there. But there's nothing here yet to offer a continuation or a reversal at this point. It needs to kind of base out a little bit longer and correct more after this impulse wave, measured impulse wave. So right now, intraday, kind of getting more of an upside type of vibe on it on the smaller time frames. So we go into next week. So here's what I'm looking at, these comparable impulse waves. And some of these can go and develop into a two-wave move. Like you'll usually get that second low reaction, and we're right at that second low reaction right now. So we need to see how it reacts off of that. So this is where intraday has a little bit more of a bullish bias still, but it can turn around and end up breaking lower after that second little reaction. So you're looking for reaction zones like this at this point. All right, gang. We got off to a little bit of a late start here today, so went over. Yes, I will be sending a link for the Ninja Trader webinar. So I'm basically just going to send it out to the entire list I have, so I don't miss anybody. Make sure everybody gets over into it. And it'll be about for an hour. They kind of give me free reign to go however long I want, but try to keep it right about an hour. Futures market is just still kind of stalling here in today. Still think we've got a little bit of wiggle room here on that Russell on the upside. All right, you guys, I'm going to head on over to the forum. I will be in there for the rest of the day. I'm just working on, I am actually working on an introductory course for futures trading. It's going to include the micro stuff. So it's going to be aimed at brand new traders. So much of the work that I've done over the last couple of years has just been aimed at intermediate to advanced traders. And I've been looking over stuff that's out there, like free websites and like beginner get started stuff on futures trading, because I've had traders be like, I am totally lost. When I come into your room, you go through everything so fast, and I know it makes sense and I know it's awesome, but it's like whoosh way over my head. So I'm going from the very, very beginning, from opening an account, setting up your charts, and even some stuff like I was talking to a guy last night, and it's like, I don't really see the difference between a market order and just the bid or the ask. Why does it make much of a difference which one I'm going to use? Well, it might not make too much of a difference on sim trading and in really liquid markets, but trust me, it makes a huge difference when you're going up in contract size and you're dealing with other markets. So, a lot of that stuff that is just, I don't really go into too much in more of the advanced classes. Even traders that have been trading for a couple of years are missing stuff. So I think it's really important that I go back and cover all of that. So that's where a lot of my energies right now are on, in addition to doing, League of Traders throughout the week, of course, as well. For those of you that are all the intermediate to advanced folks in League of Traders, but I want to cover more of that groundwork like I used to do, 10 years ago. Basically started out with, hey, here is a moving average. Here's how you add your moving average to your charts. So I'm working on all of that fun stuff too. Get everybody up to speed. Glorious. I love that name. I remember on Buffy. Like old school Buffy the Vampire Slayer. Glorious. So a link for self-study course. The one that you guys want to start with, that if you are a newer trader right now, is the market timing bootcamp, because that goes through a lot of the really basic stuff. And it also has a textbook that is totally new stuff. Hold on, let me see if I got the link that is the cheaper one that is not on the main website. I think it is /timing. Yeah, so that boot camp here, let me go and post that link for you there. So that is the one that you want to focus on just to get started and to get up to speed with a lot of the terminology I use, the strategies that I use. It doesn't cover basic things like how to open an account, but it does take you from setting up basic tools like how I have my charts, things like that. And the textbook portion also goes into really beginner stuff, but then it goes and moves into the intermediate stuff as well. So it covers all of the main strategies that I trade. It gets you up to a level where you're not lost if you join League of Traders. So that is the main core beginner course that I have right now, but I'm going even into more detail with the new stuff that I'm working on. So that course, the Market Timing Bootcamp, is $297, I think, if you go like right to the site, but the link that I gave you gives you $100 off of it. And it's about, I want to say like 12 and a half hours, or if it's at 14 and a half hours. It's one of those two, as far as like how much material there is there. But there's 2 textbooks that are great to catch you up to speed as well. All right, everyone, I'm going to wrap this on up. I'm going to get posted so you can review this at tonyhansen.com/Friday in a couple of hours. I usually have it up before on that link before the end of the trading day. So you should be able to go back and review that there. All right, you guys, I am heading out of here. So have a wonderful rest of your day and enjoy the weekend. And I'll see y'all back here next week. And I'll see some of you folks over in the forum as well.